traders. Nathan here to get traded again. And I'm here today, guys. I'm trying to look for the next leg up or the next leg down. Just basically, I want to see where gold is going next. Because the whole inflation, deflation, stagflation, any inflation fucking nonsense you can think of is all over the market. No one really knows what's going on. And I want to try and paint a picture, guys. Because I'm very in two ways. I'm not actually too sure myself in where gold's going to go. I think personally I favour the upside a bit more preferably, but the downside also has what's the word? The downside also looks very, very favourable as well. So I'm in a bit of two ways about it. But first thing I want to do, let's look at the 10 technical before anything. We're sort of sitting here on the previous all-time highs here. We are just sort of sitting here. We're using these all-time highs, sorry, the previous all-time highs as supports here, guys. We've got this sort of inverse head and shoulders pattern here, guys. So on a technical, you could do something like this, you know? Is that way? So you could do a little something like this. I can move up here, then boom. Back up to all-time highs again. Or it could be that this dirty candle here tells you another story. And guys, you've got to remember as well, we are still in the boom cycle of the world. We got the central bank talking about every bank is talking about hiking rates in the next year or two, guys. So is this the place for gold? Is this the place? Well, that's what I'm here to talk about. Let's get a few facts straight. Also, one thing I guys want to let you know, I'll post all these articles into the description underneath the YouTube video, but a lot of central banks have upped their gold intake substantially. I think the Thailand central bank has bought 90 tons of gold. The Russian central bank has upped it. Various central, especially Asian central banks have upped their gold intake. Now, why would they be doing that? Especially when the economic state of growth right now, and growth is nowhere for gold to be seen. So why? Is there something around the corner that we're not seeing? Is there something more to the picture, which is what I'm trying to sort of pick at? One thing I do want to have a look at is the DXY. Because the DXY, as I've looked at multiple times, looks like it wants to go up. And as you know, gold, I mean, DXY is obviously the common denominator, isn't it? So if this goes up, gold would naturally go down. But don't get me wrong, there are obviously environments where they both go up together, both go down together. Of course there is. Of course there is. But that's one thing I do want to sort of point out to you guys. DXY, I mean, we could even, you know what? Oh. Apologies, guys. I don't know what I'm doing there. So, even, guys, let me even get up because I suppose it's the end of the quarter, isn't it, really? Guys, to me, that looks relatively bullish. It does. And that's the place for gold. But gold is a lot more than just an opposite correlation of gold. There's one thing I do want to have a look over. I want to put to you. First thing is tips. Now, guys, tips. I don't know if you heard about the tips. The tips is basically inflation-backed bonds. So it's bonds with the inflation on top of it, guys. So it gives you a very true value. Now, I want to overlay this. As we can see here, it's pretty, it's still on the weekly, sorry. As you can see here, it's pretty like for like, but here they're right here. Back in November, there's been a slight, what's the word I'm looking for? There's been a slight So I'm being absolutely ridiculous here, guys. I apologize. Oh my god, this is awful, guys. I apologize. The pattern hasn't followed the correlation. So, oh my god, I apologize, guys. Wow, that's embarrassing. The correlation has gone like for years. Look at it, pure like for years, and it's sort of it's left a little bit here. It's been a bit distant. Now, is this going to follow up? Is this going to follow? Come back up to here? Because as you know, guys, bonds don't lie. Bonds are the truest value. Bonds are the truest value. Are they going to leave this nonsense and come up here? And because as you can see here, we overshot here, then we came back up and caught up. We overshot here, we caught up. So every time this is overshot, it's sort of caught up to the downside. So really, is gold leading the way, or is the gold price manipulated? The bond price is true. I mean, let's be honest here. I think we kind of, it's a very known fact. So I want to say a fact, sorry, that's the wrong word. It's a very known, it's a known idea that the metal price is a little bit manipulated. It doesn't show the true value because as you know, the spot price of gold and the paper price are very different. The premium in between is very different. It's fixed about 20%. So it's a very big difference. So is this where gold should be? Back up to the equivalent of what? That's almost a double top. So what? Back up to 20,000? So will we see this catch up here? Will we see that? Or there will be further or is it a further spread in this correlation here, guys? Another thing that I'd like to overlay with is the inflation expectations, which is under the thread. How am I going to get this on here? Sorry, 2.6. Sorry, guys, apologies. Let me just widen that out. Actually, in fact, to make it easier, let me get this. I just overlay. Let's get this. Get a line chart out. Let's overlay gold. Now, as you can see here, guys, gold is the common. Gold seems like it's got catching up to do. It seems like, but then at the same time, does it look like here? Does it look like to you guys that inflation expectations have topped out? Get back up to candlestick chart. How we got? Is there some sort of weakness that we're looking at here, guys? Because here to me looks like we may have some leakage. Or is this just another little dip here to come down over here, then for the big boom up? Because guys, to be honest with you, the Federal Reserve, the ECB have both said there's another 1.5 trillion of liquidity to add into the market, which would be very supportive to risk. I'd be very supportive. So, I mean, there's talk about tapering, but it's not happening yet, is it? Is there one last push of inflation left before we see maybe the foot's getting eased off? I'm trying to paint a picture here, guys. This is what I'm trying to paint a picture of for you guys. Is it game over yet? Let's try and overlay this as well. Sorry, let's also get another picture over here. Let's try and overlay a clear image of the dollar. And by that, I'm going to get up Euro USD. Euro USD is like gold, but not on the steroids. It's a bit of a true value of the DXY. Obviously, the DXY will be inverted. Obviously for this. So let's Let's just get everything up here. Let's try to paint a picture. And even oil. Oil's a little bit of an inflation hedge here. Now, to be honest, they're all heading a very similar direction apart from gold. Gold seems to be cutting off slightly. Now, why is the only other reason I can think of is obviously the strong dollar. But what's going to play catch up? Are the bonds going to dip into this, or is dollar, are the bond yields, are they going to dip into this to play catch up, or is gold going to rise to play catch up? I think personally, it's safe to say. I'm actually going to take oil out the situation here. I'm going to take oil out. Even Euro USD there. Sorry, let's take this on. Let's have a look at Euro USD on its own here. Let's try and get a complete picture here, guys. Because Euro USD to me, the last protocol for any sort of upside move is to be in this very interesting candle here right now. If we don't get to move up here on Euro USD, all hope is lost. I think there is a big leak. Really, I think all eyes point on this week. There's a lot of macro data as well. So really, all eyes point on this week. And don't forget, it's the end of the 6 monthly candle tomorrow as well. So it's a very, very interesting week. Very interesting week. So I think all eyes are on this on the 1.88 level here. Pretty significant area here. So support here as well. So really, the 1.9 level to play safe. The 1.9 levels is a significant area here. Because if we see price go up like this, the dollar goes down, that means inflation is back in the market, to be honest, guys. That's basically what it means, to cut a long story short. Euro going down, deflation. Euro USD going down, deflation. Euro USD going up, inflation. That's pretty much, cut a long story short, guys. That is what it is. So. The question is where? Where? Now, it's hard because as the Fed and the ECB are being very supportive, we can't really go against the Fed and the ECB being supportive. Now, them being supportive means they're going to add more. They're going to add more stimulus. That means there's going to be more inflation. That means inflation will be supportive. They're not even trying to fight inflation, to be honest. They're not even really trying to do that. They're trying to be supportive. And supportive comes with inflation. And let's be real, it is transitory. It is transitory until they take their foot off the pedal. Everything will go back to where it was. It will. Now, has this topped off here? This is the tips market. Sorry, let's get. Pretty same story here. Now, let's overlay everything again. The two important ones anyway. and I'm going to go with the factor where it's bonds to always tell the truth. Bonds will tell you a story, but then also another factor that I'd like to point as well. Sorry guys, I'm chucking out low. I'm trying to paint a picture. 10-year Treasury yield market now. Don't forget the yields. Inflation sort of topped out here in March. Don't forget the yields going up, the bond yields going up is for inflation, guys, because of the inflation going higher, they want the yields to be higher, so they can obviously try and break even more. Do you know what I mean? When inflation goes up, the bond yields will go up to try and match that price. Now, obviously, a sort of move here, but let's be honest, it looks like this is a sort of bottom pattern almost here. So, has inflation bottomed here short term? Is that why gold's so low? Has inflation bottomed for the time being, which gone up and up and up? I'm just painting the picture that the bonds don't lie. And if we get the line chart out here on the weekly, we look like we sort of bottomed out a little bit, short term. We're going to get sort of moving like this back up, which will strangely support gold if it's for inflation reasons. You've got to remember, if this moves up because of yield or because of growth or inflation, there's two different reasons, guys. So you've got to make sure you differentiate why the bond yield's going up. You must remember that. But going back to my original point, is where's gold going really? Where's gold going next? I can safely say it's a very hard prediction for me to make as well. I can safely say, unless we get really strong macro data back this week, really strong, I can safely say wait for it, drum roll. I think gold may have some catching up to do. I think it may. The bonds don't lie, and they don't really look like they're coming down. The Fed have already said they're going to be supportive. They've already said they're going to be supportive as well. So, especially look out, especially the correlation between the tips as well. Look, the tips are going to be fantastic. But then we can see tips come crashing down now and then play catch up with gold, or we can see gold come catching up. That's the biggest question. To me, it looks like it wants to break out, to be honest. Inflation wants to be higher. They've had a very good correlation, very big correlation. It's a sticky one, guys. I think really all eyes are on this week for us to get a clearer picture. But that is where I stand, guys. That is where I stand. I hope this video has been helpful. I really hope it has. There's been part 2 of this as well, because we're only scratching the surface here, guys. I'm gonna get some more. I'm gonna chuck you into the gold articles as well, so you can have a look at them. And yeah, guys, just let me know what you think in the comments, and we'll go from there, guys. Have a great day. Let's smash it. Guys, sorry, I forgot to add this to the previous video as well. Look at the correlation between inflation, gold, and this is yen against dollar, not the other way around, yen against dollar. Not this USD JPY, this is yen against dollar. So I just want to show you the look at the disregard here, just the complete mix in communication here. There's either inflation is completely wrong here, or yen's we're going to see a big push up again, or inflation's wrong. But another thing here, which tells me it's not. I mean, when are the bonds wrong? The bonds are not wrong, which means tell me maybe we're going to get some very, very big push up in yen soon. I do not know. I'm just trying to point another picture up for you guys. And it's very strange. If I add all JPY, which is the complete opposite, which is complete risk, or JPY, we can see since the March crash, it's actually very supportive. Very supportive. So there is something not adding up, guys. There is a complete disconnection between inflation and these FX prices and these spot prices, guys. So I don't know who's wrong here. I don't know what, but we are going to see a big correction come soon. Whether we're going to see more of this inflation, which I'm talking about, I'm not too sure. Whether we're going to see this inflation, I'm not too sure, guys. I'm just pointing the picture out here, guys. I'm trying to point the picture out so we can try come to some sort of agreement. Or if you guys will put some comments in the comment section, that'd be fantastic. So I want to know what's going on here, guys. But personally, I mean, if we see the tips market start dropping off, we know what's going on here, guys. Because the tips market. Sorry, Joe. Let's add it. Let's get it all in again. Let's get it all in. Let's get it all in, and let's see what the fuck is going on here. Inflation expectations. Let's overlay JPY USD. But yeah, the goal of the weakest links here. So what's going to happen here? Are they going to catch up? Is that are we going to see all JPY loses correlation? I don't think so, because the Fed is going to be very supportive of risk, and risk at the minute is supportive for inflation. So maybe this discontinue will just happen. Maybe we'll see gold and yen just drop off. Because to be honest, guys, I am expecting deflation. That's what I am expecting it. I am expecting deflation. I'm expecting everyone to be shocked. I'm expecting a dollar to be very strong. So this is very mind-boggling for me as well. Let's get Euro USD in here as well. Let's get US oil. As you can see from the March crash, it's been all risk, isn't it? It's been all risk up, which has been very supported by inflation, and the rest have gone down. Be very interesting to see what's around the corner. Very interesting. Very interesting, guys. But the Fed will be supportive. It's been supportive for this whole year. I mean, how much more supportive can it be until we get some sort of relief? A nice bit of yen relief, and that will feel a bit of risk-off relief, maybe for gold to catch up to the upside as well. I mean, let's have a look at yen futures. Let's get rid of all this. Have a look at yen futures. Yen futures look like they want to die. We have come off that level, to be honest. If this level holds, then this could be the key. Mate, all eyes are on this week, to be honest. It's a very important week. All eyes are on this week. Obviously, we've got the yen news, but they actually will start tapering earlier. So that tapering news can be very beneficial for the yen. So let's see. And that tapering news come out this morning as well. So let's just see. But guys, that's the video. Please give a comment. Please give a comment. Let me know what you're thinking. And yeah, guys, let's keep our eyes out and let's just trade what we can see, guys. Trade what we can see. Anyway, take care, guys. Speak to you soon.